Okay, good morning, everybody. Welcome and thank you for joining us today for the Introduction to Financial Management and Bookkeeping webinar. We have a lot to cover, so we want to get started soon. But before we do, I want to introduce myself. I'm Heidi Shepard. I'm the project director for the DC Women's Business Center. So some housekeeping tips. You probably already know this, but I do have to announce it anyway. Everyone's on mute. If you have a question, please put it in the chat box and the questions will be answered throughout the presentation. The webinar is being recorded. The recording and the slides will be sent out to you in a day or two. Now I want to tell you a little bit about the Women's Business Center. Our mission is to empower women entrepreneurs to build resilient and successful businesses, to strengthen the community's economy and create wealth for their families. We envision a thriving ecosystem of women entrepreneurs in the DC metro region who have access to the tools, capital, knowledge, and networks to create a supportive environment in which to grow their businesses. We are part of a network of over 150 women's business centers, all of which are funded by the Small Business Administration. And in our case, our center is also supported by the National Community Reinvestment Coalition. This just explains a little bit about the tools, capital, knowledge, and networks that we employ to help our women business owners. We have two tools that we use with our clients that are free to our clients, Live Plan and Growth Wheel. Live Plan helps you write a complete business plan that is ready to be submitted to funders, and Growth Wheel is a business decision-making tool. Sorry. We also help our entrepreneurs with access to capital. We have webinars to help our business owners understand how to start a business, on all sorts of topics. And then we also have networking opportunities for our clients. We provide free one-on-one counseling sessions. We have webinars such as this one. We have training courses, peer-to-peer exchanges, and a website that contains a slew of really interesting information that's relevant and important for you. So I encourage you to visit our website, www.dcwbc.org, which is where you can sign up for our free counseling sessions and see the upcoming webinars that we have planned. Great, and now I would like to introduce one of our speakers, Ian McDermott. Ian is the financial program manager at Start Small, Think Big, where he spends most of his time working with one-on-one clients, developing their business financial infrastructure. Ian's background is in community and economic development, in which he holds an MA and is currently a law student at night. And it looks like Ian is a big cyclist because he's got a bike hanging from his ceiling. So take it away, Ian. We will have Jessica also presenting, and just want to quickly, before Ian, you take it away, Jessica is a graduate of Brigham Young University in Idaho and later owned her own business, Skullet's Scrub Hats. She dedicated her time and energy to raising 5 children. Wow. Now the children are getting older. She is now refocusing her objective to become a bookkeeper. She will be speaking later to you about the bookkeeping section, and looking forward to hearing from Jessica as well. And now, Ian, you're up. Should I stop sharing, or are you going to let me do the advancing?
I think it can boot you. Look at me 1 second.
Okay, I'm going to stop sharing.
All right, it should be sharing the same thing you just saw, but yes, I'll be navigating. So my name is Ian. I'm the financial program manager at Start Small. We're very pleased to get to work with the DC Women's Business Center, and also to get to introduce to you a volunteer who's been a big help to us, Jessica. Jessica will speak to you in a bit, just a few slides of kind of introduction about Start Small, Think Big, and really about kind of basics of financial management before we kick off on the specifics of bookkeeping. So these slides are also accessible at this bit.ly link. It's bit.ly/SSTB FMBK. You might see a little bit of variation between the separate presenters, but if it's helpful for you, please feel free to go ahead and follow along. So the organization that I work for is a nonprofit. We're primarily headquartered out of New York City in the Bay Area, and our mission is to serve low to moderate income entrepreneurs, providing free pro bono services, both from in-house staff experts and the pro bono experts who join us as volunteers, either individuals or organizations from different industries. The content programs that we have, one that we'll be speaking from today is the financial program, but we also have a legal program, which is actually our oldest and most developed program, where you can work one-on-one with attorneys to look at entity consideration, contracts, negotiation, doing business online, trademarking, and things along those lines, as well as a market access program, which can focus both on actual marketing and sales. So, of course, over a period of COVID, that's involved a lot of shifting to online marketplaces, trying to define your customers and find out where they are and how best to present your business or the things that you're selling to those markets. That might involve logos, design, website audits, and more particular or broader pitches to customers, potential partners, things along those lines. So you can see our website, startsmallthinkbig.org. You can find more information about us, learn about who we're serving, how we're serving them, and even shop shop our clients, become a customer of the small businesses that we're serving, and find out who else is doing similar work to you. So because we have pretty much shifted services entirely online at this point, we're able to serve throughout the entirety of the country, and DC is one of those locations where we've started to build more and more of a presence. So please feel free to reach out to us. We even have attorneys who can deal with local kind of issues as well. From the financial program, we really kind of focus on these 5 main pillars. We're only going to touch on the first 3 today. So our goal is to make sure that the entrepreneurs we're working with, the business owners, can at the very least understand the financials that they might have hired out from accountants, might have gotten advice on from partners, investors, or different strategists or advisors. But very often it's helpful early on to just start doing the work yourself. That's very often the easiest way to learn. Finance does have its particular language and vocabulary, and it will be a lot easier for you to kind of retain the definitions of those vocabulary when it's your numbers and it has an actual impact on your life. So the things we'll talk about today are, first off, just separating finances in a way that allows you to see what's truly the business's finances versus what's your personal. And when you do so with a bank account, it's going to make bookkeeping a lot easier. So we'll talk about specific ways to do bookkeeping. There are softwares out there that will make your life a lot easier, and they will generate financial statements. Financial statements are a particular structure of information about your business, but it's actually a very helpful one. Once you understand what it is trying to tell you, it can make things a lot easier to identify when there are changes needed and when things are going well, or just how to speak about your business. Once we have those numbers in that kind of language, it'll be a lot easier to move into things like that we would generally call growth and strategy, often focusing on financial projections, where we're taking existing numbers and saying what would happen in the XYZ scenario. It could involve pricing, different expenses, or taking on capital. If you have loans and there are debt repayments, or you're looking at investments, trying to figure out a valuation, what's a fair investment or amount of equity to offer. We can talk to you about what those options are that are out there and kind of how best to present your business for those opportunities, whether that's putting together a traditional loan package or pitch decks, essentially slides, presenting highlights about your business and what you're asking for someone who might have funds that you're hoping to invest. So today's workshop like I said, we're going to really be focusing on those kind of first three pillars, the separation of finances, how that allows you to do bookkeeping, talking specifically about the bookkeeping systems, Wave and QuickBooks today, but these are analogous to really any of the digital bookkeeping softwares you'll see. And because these generate financial statements, want to just give a high-level overview over the three primary financial statements, how they differ, and ultimately what story they tell, and how you can use all of that to actually see what's going on in your business and make informed decisions that help you grow. So on the first piece, this financial management, we don't want you to be in a situation where you either have to sift through a ton of unrelated transactions to figure out what your true business numbers are, or get into a situation where you're personally liable for things that you thought you were not personally liable for. So this first section, we're talking about the separation of finances, typically in an actual bank account, where you have one bank account for your personal activity. It could be employment, it could even be another business, self-employment, and then one for a specific business that you want to track finances in. Now, if you have a separate entity for this business, like an LLC, limited liability company, or a corporation, then you actually need to have these funds in a separate bank account. If a judge was to, if there was to be a lawsuit or debt collection against a business, even if you had this LLC paperwork, but your finances were mixed, both personal and business, in the same bank account, or you had personal transactions frequently showing up in a business bank account, a judge might say that you're commingled, and that could allow them to collect on your personal assets or future wages. So we don't want all the paperwork and costs that went into setting up this separate entity to all be for naught just because you didn't take the time to separate out finances. So if you are doing that liability limitation, you need to have a separate bank account, ideally one that's under the business's name. Even if you are, if you have unlimited liability, right? You're either a sole proprietor, independent contractor, self-employed, without an entity, or even a partnership that has, again, unlimited liability, you would still benefit from having this separate bank account, even if it's just under your personal name and social security number, because it'll help you stay organized. It'll help you see what's actually going on in the business. And as we will talk about, it's going to make things like bookkeeping a lot easier. The benefits that you can get out of using particular business bank accounts, and most banks, when they're talking about a business bank account, because they have a product that has business account in its name. It's a checking account, savings account, often credit accounts as well. And this will differ from bank to bank. You might have slightly different terms, but in most cases they'll have different requirements. In particular, if you're trying to get that business's name on things like your checks, or you're trying to be able to deposit checks under the business's name, in those cases, the bank absolutely needs to confirm that you are the one who has ownership of that name, that you're not cashing someone else's checks, or writing checks that aren't about your money. So when you have that, it does help, could increase the legitimacy of your business in the eyes of customers or vendors. But you will need to prove it in one way or another. Now, some banks will allow you to have this business name attached to the account, even if you're a sole proprietor, if you have things like a DBA, which is this doing business as documentation that just shows you're the one who's in control of that name. But in many cases, you will be told that you need to come back once you have a fully structured entity like an LLC or a corporation. And in those cases, you would need things like your business founding documents, which could be articles of organization for an LLC, or articles of incorporation for corporations. Even if you don't need an employer identification number as far as the IRS is concerned, you might find that a bank representative is asking you for this information. they might not fully understand the laws, or even the bank themselves just might have their own requirements. So it's a really quick thing for you to do on the IRS website, as long as there's no contention about which business is named what. You can get it for free. The employer identification number, it's essentially a taxpayer ID for that business entity. And you might find that the bank is asking you about sales tax. Many of your sales, especially services, might not be taxable at all. But in the case that a banking institution asks you about this, if you either need to be able to tell them that you're not taxable convincingly, that your sales are not taxable, or you're going to need to present proof of either a seller's permit, a certificate of authority, some documentation that shows you have registered with the local tax authorities to collect sales tax on their behalf. All right. So in the case of just making things more easy, of course, if you are submitting your finances to a tax preparer at the end of the year or the end of the quarter, and they have to ask you a bunch of questions about which bank transactions are personal or which ones are business, it's going to take them more time. And if it takes them more time, they're likely going to charge you more. So being able to prepare things like taxes more easily, more quickly, when you just have one clear business bank account, it's hopefully going to save you money. But it's also going to help you understand what's actually going on for your own sake. Now, unfortunately, you cannot just rely on bank statements. There will be bank deposits that are not actually sales. It might be you moving funds from your savings account into your business account. It might be sales tax that you've collected, which aren't actual sales, and you don't want to pay income tax on that money. It might be a loan you've received, a grant you've received, things that have their own particular considerations that you don't want to confuse for other deposits. The same thing with expenses. There might be, same thing with withdrawals. There might be withdrawals that are not actual business expenses. There might be business expenses that you want to understand better, that you have a hard time identifying what you actually purchased when you're just looking at a bank statement. And that is really the benefit of using bookkeeping systems. So for that, I am going to introduce Jessica to talk about some of the bookkeeping systems. Are you able to share?
I'm going to unmute myself. All right, and I'm going to share my screen over here. And welcome to the webinar. So glad to see you here. First of all, congratulations on owning your own business and running your own business. It's exciting, and we hope that we can help you with your goals. Second, feel free to ask questions whenever you want. You may be one of those people who likes to think about what your questions a little bit, and then you want to ask them at the end or email them personally. Or you may be one of those people like me. I really like to interrupt to ask questions, because that's when the questions come to me. So if you're one of those people, don't worry about interrupting. Just, type your question in the chat and, help get it to me, and then I can help answer those questions, or we as a group can help answer those questions. There are many things that can be taught about the financial end of owning your own business, and you've probably learned a lot of them already. I would like to start from the beginning and just teach a few things that will kind of help you get started when it comes to your bookkeeping needs. First will be choosing and setting up your financial software. I'm going to be presenting two different options, but there are many different options you can choose from. Categorizing your business transactions, basically saying what this business transaction was and putting it in that category. We're talking a little bit about invoicing. We're going to be viewing some reports, and I'd like to talk about just briefly about reconciliation process and Schedule C tax forms a little bit. When we start choosing and setting up our financial software, we are taking a look at categorizing business transactions and briefly sorry, we've already established, basically Ian talked about as a business owner, you need to separate your business account from your personal bank account. And now I want to talk about once you do separate and have your own personal business software, business account, you need to have some software to help account for the different transactions in that account. And they have two options here that we're going to talk about. We have Wave and we have QuickBooks. Now, Wave is completely, well, it's free service. It's an accounting system, and it's offered online, and it has a business focus. Whether your business is a cash basis or an accrual basis, this program will work for you. It's customizable to your basic banking needs, and it connects directly to your bank account. So it allows you to see transactions as your bank gets them. They have a few services that you can pay for. These are basically add-on services. There's payment processing. Basically, if you send out an invoice and someone wants to send you a payment, you can process that directly through Wave. Now they will charge a fee. It's, you know, comparable to like PayPal. It's a small, like 3% fee, something like that. But it is an option. There's also payroll processing, and they have income tax support through H&R Block. Another wonderful option for bookkeeping is QuickBooks. This is basically one I'm maybe a little bit more familiar with, but QuickBooks is basically the original bookkeeping software. Has a lot of great services. The online, QuickBooks Online is a monthly paid program. I know as compared to, we've talked about Wave being a free program unless you have the add-ons. There's different options for QuickBooks. And sometimes that gets a little bit confusing, especially when you're starting a business and you're looking at starting out with QuickBooks and you see all these different options and you don't exactly know what you need. Well, I'm going to talk about a few of the options. There's QuickBooks Self-Employed. This is a single entry bookkeeping system. It's not a full bookkeeping system, so it's not like Wave. It's similar to a bank ledger. And when you have a business, you really need a double entry bookkeeping program. So it's not really going to be something that you're probably going to want to use. And basically, it doesn't give you the options that you need for a business. When you have a business and you send out invoices or you get paid later than your services, or maybe you get prepaid for your services, it's very hard when you don't have a double entry bookkeeping system because you can't count for those different dates when it comes to when you get paid. So then we have our next option, which is Quickbooks Desktop. And maybe you actually have this. It's basically where you buy a program for your computer and you load it onto your computer. You may be familiar with this. You may have owned it before. This is a good program for many reasons, but it's harder to use in real time. What I mean about that is it isn't automatically connected to your bank account like Wave would be. You have to download your bank statements onto a spreadsheet like Excel, and then you have to, or a specific format, and then you have to download those to QuickBooks. So you won't be up to date with what's happening in real time with your business. You have to kind of upload information and then go over it and transfer it. And when you transfer it, things can get lost in the process. And you can also, if something happened to I've done this before, you upload information and then somehow you do something wrong and you lose it. That you can't recover that when you're using QuickBooks Desktop, or it's really hard to recover that. So really what you need is an online system, and Wave is an online system, but QuickBooks, has been evolving over the years, and they've realized that you needed an online system that works with your bank, and that's where we come to the Simple Start system. So the Simple Start system for QuickBooks is going to be equivalent to the free services at Wave. That's basically, with coupons and stuff, you can get it for $25 a month about. And it's really a good system to work with. There are a few things that are different from Wave and the Simple Start from QuickBooks. So QuickBooks does offer a few more things, and I don't know, it depends on you and your business as whether or not you want to use those. The first is that it has a lot more extensive reports. There are lots and lots of reports through QuickBooks, which when you're just starting out, you may not need those reports, but as you get going in your business, they can be very helpful. Another one is that they have a miles tracker, and it just depends on your business, and you can, on your own, you can calculate miles without a miles tracker, but it is a helpful option with the Simple Start. You also have the option to have check printing. That's something that Wave doesn't offer. However, now with most of the financial processes being done online, you don't necessarily need checks printed. It is something that's your preference. But other than that, pretty much they offer the same services as the free service through Wave. When you move up in QuickBooks, you have the Essentials package. Now, this is where you start to differentiate from Wave. This is where it's more expensive, but you have more options depending on your business and what you need. So the Essentials is the product where we start to see the difference with Wave. It's a $40 a month service, and you can customize your business a little more by adding billable hours for you or your employees. You can add recurring invoices. So if there's someone that you normally bill or send an invoice to every month at a certain time, then you can set up a recurring invoice with that. There are more vendor options, which helps with your bill management. You have, because you know your vendors will send you bills, and you can actually set up a whole system where you have all of your vendors in there. So it's a little bit, it offers a little bit more depending on the type of business that you have. Usually when you start out, you may want to start out simple with something like Wave, and then if you find you need more, you can move over to the QuickBooks, deciding on what you really need for your business, but that's, you know, completely up to you. Finally, QuickBooks offers the Plus plan, and this is about $70 a month. And that again is with some coupons. This would be a really good option for you if your business handles things like inventory. If you have more than one business, it helps to keep you from getting confused with the businesses, to track them, to track their profitability. Because if you have two different businesses and offer two different types, you have a service business and you have an inventory business, things can get kind of confusing. This will help separate them out. So you can basically see how profitable they are and what makes each business profitable. There's a lot more reports with the Plus. So it's a good option depending on your business, depending on what type of services or products you're offering. Now that you've seen some basic accounting software, we can talk about categorizing. So it's kind of like, okay, maybe you're here, maybe you're at this point where you have this business banking account, and you have this accounting software, and they're connected, and you're just, what do I do now? Now that we've chosen the online program, what do we do? Well, first I'm going to go over briefly just how to connect your program, and then we're going to talk about, or connect your bank account with one of these programs, and then we'll talk a little bit about categorizing. So we're going to go to our Wave account. I have just like an example set up right here. Let's say that you've gotten Wave account and now you want to set things up. It's quite simple. You just go to banking and you push the little arrow down and you have connect accounts. So this will give you lots of options. They have all these banks that a lot of people may use already. Now, maybe you don't. Maybe you don't have one of the banks on this list. That's easy. You just type in the bank you want to use, and it will bring it up. Now, one thing I did want to talk about, that when it comes to Wave, what matters is the bank that you choose for your business. It matters that it has a really good online presence and that it is compatible with different accounting programs. Some banks, maybe smaller credit unions, don't have the ability for you to hook them up to something like Wave. And some of them, my bank in particular, I have several different banks, but one of them that I use for my basic personal needs does not allow third-party systems to come in and, get information. So it will not work with Wave at this time. I know that Wave's kind of working on some of those different glitches. But let's say we're going to choose a bank account. Let's say that you have Bank of America, you continue, and then it's really simple. They just ask you to put in some information like, your username and password, and then your bank will probably go through and ask you to confirm the information, and then that's it. You're pretty much set up. So we'll continue presenting here. And now we're going to talk a little bit about categorizing your information.
Jessica?
And yes.
Excuse me a minute. There are a couple questions in the chat that you might want to answer at this point.
Yes. Thank you. Let me see if I can go back to for some reason I don't see the chat. Ian, could you maybe read some of those questions off?
Yeah, and I'm comfortable adding to a couple of these.
Yes. Go ahead.
So one question is, since Wave is free, am I the product like Facebook? What is the security features of these online platforms for bookkeeping? So my preface would be that neither of us are data security experts. Not sure. I have a general response to this, that when asked about it, I'm not sure if you have anything in particular.
I have a general idea. My idea is that the way that you're basically asking, how is Wave possibly making money off of this? And my answer would be that when you get to using the software, you're probably going to want to use things like payroll and the payment processing, and that eventually I think is how they're going to get their money. But what were you going to say, Ian?
Yeah, absolutely. Their hope is that you start paying for these add-on services. H&R Block actually bought them out a couple of years ago. So the funnel from people using the free bookkeeping system into using H&R Block's income tax is pretty favorable to them, pretty likely. And there's also obviously all these other ways that H&R Block makes money on their own to support systems like Wave. In terms of the actual data security, the login that Jessica was just showing is actually run by a financial tech company called Plaid. And Plaid is the same system that's used by Venmo, Acorns, and a number of other kind of money transferring or bank technology tools. So frankly, if you're comfortable using any of those, there's no reason that I think anyone should feel additional concerns about using Wave. The unfortunate reality is that online banking has its own concerns. But another point that was brought up earlier, like compared to when you're using, let's say, a desktop bookkeeping system, if you lose that information, there's very little recourse that you have. By using these digital online systems that are tied to a cloud, there's a long trail of data. So if something concerning was to happen, fraud or theft, you would be able to at least attempt to investigate what happened, because that data is tracked somewhere, as opposed to really the only way you could avoid kind of online banking at this point would be, cash in a mattress type thing. So without getting into, unfortunately just don't know specifics about which data packets they're sending to whom, and if it's any different from one or the other. But, and then there's another question about Square. Will we be talking about Square, and do they have bookkeeping features? So I'll just give a quick answer here. So Square is really just a point of sale system, and Square is a great point of sale system that has a ton of reporting options, and you can even put in things like what your inventory, how many items in your inventory you purchase, what they cost, but it's not connected in a way to your bank account where you would be able to see all of the bank transactions, expenses, deposits, withdrawals that occur outside of Square. So if bookkeeping is the umbrella, Square would be a piece inside of it. And both of these systems do have integrations with Square. Whether they're super helpful or not, it depends on the information you're trying to get. And I think that's it for the questions for now. So I'll let you take it over.
Yeah, thank you. For some reason, I can't really see the chat right now. So if there is anything else, just feel free. Thank you, Heidi, for letting me know that there was those chat questions. So we're gonna go talk about categorizing now. When it comes to your, oh, I just figured out how to do the chat. Awesome. Okay, when it comes to categorizing, you're basically going to have two main things you need to categorize, and that would be income or money coming in. And also we have our next one, which is expenses. When it comes to income going in, they can come from many different sources. We can go back to that slide. There's sales from products, like we talked about, or sales from services, things like rental property, owner's equity, and a lot of different other ways that you can have money coming in. So when we're categorizing, they're going to categorize in different ways, just like in those different spots. And then there's categorizing expenses. Categorizing expenses, there's different types of expenses. I kind of wanted to go a little bit over two different types, and one was the cost of goods sold and one was operating expenses. And I wanted to go over them just a little bit because they're two really different types of expenses when it comes to your business. And it's important to know the differences when you're categorizing them. And one is the cost of goods sold. This is how much it costs to make whatever you're selling. So they are direct costs associated with the products of sale, like materials or shipping. They are a variable cost, which means they change with the amount of sales. So for example, if you are making a widget and the widget costs $10 to make, and then you sell 10 of them, then your costs are going to be $100. Whereas if you sell 5 of them, your costs are only going to be $50. So it changes according to how much you make or how much you sell. And then there's the operating expenses, and these are not associated with production. Examples are advertising, rent, computer software. These are fixed costs. They do not change with sales. For example, let's say you sell 100 widgets, your rent is still going to be the same amount, or as if you sell 100 or 50, it's going to be the same exact amount. It's not going to change depending on how much you sell. And so we're going to actually right now go to some examples of how to categorize. We're going to go to, I'm going to go to Wave right here and go to another account. And it's just going to take a minute to load up. We're going to decide what we do now. So now we have our bank account is connected directly to Wave. Now what? Well, we're going to go to our accounting tab over here on the left. Now, if you don't see any of these tabs over here, you can, there's going to be 3 bars and you can just push it and it will open up this menu here. So you go to accounting and we're going to go to our transactions. And we see over here many different transactions. You see some of these transactions are going to be in green and then some of them are going to be in black. Wave categorizes transactions according to color. And that's it's very beneficial in things that are income that are coming in will be green, and things that are expenses will be black. And so basically what we're going to do is we're going to categorize our expenses. So let's look at this fee I have right here. I have categorized. So what we're going to do is we're going to click on the arrow on the right, and it will open it up for us. And it will let us see as much information as we have. When we have accounting software, no matter who you use, they're going to have, you know, some basic information here. You're going to have the date that this, you know, transaction took place on, and you're going to have the account, and you're going to have the amount. So you're going to try to figure out, sometimes these accounting systems will try to guess where this information should go. Now here it says it's uncategorized, so they didn't really know where to guess, but sometimes they'll try to guess. It's important that even if they do guess, you go through and decide that's really where you want your expense to go, or your income, where you want to put everything. You want it to be categorized correctly, so that when you're doing things like your taxes, when you're running reports, you know exactly where your money either went or came from. So this one is uncategorized. So we're going to decide, okay, we have a description. This is a PayPal fee. Some of you may use PayPal, and you know it's only 81 cents, but it's a PayPal fee, and you know which account it came from. You know it's a withdrawal. So you say, okay, how am I going to categorize this? What am I going to say it's from? And you have a whole bunch of different expense account ideas that they'll give you. And if you want to, you can even look up something. So let's say I want to say, oh, it's from I'm going to say it's kind of a banking fee. So I'm going to put bank here. Oh, bank service charges. They have an account right there for it. They have a whole list or whole chart of accounts that you can use to categorize information. And we'll kind of go over that a little bit later, but you can also add your own accounts. Like maybe instead of a bank service charge, I want to categorize it specifically as a PayPal service charge. And you can change that if you want. But once you've chosen what category you want to put this under, you just push save. And it does that. It saves it for you. Now, how do I know, oh, I went through and I approved that and I changed this. The bank didn't just, or the Wave didn't just come up with what they thought it was. Well, I can push this little check here and it will turn it green. So now I know every single transaction that I've categorized, that I have approved, is green. So let's maybe look at another one. Let's say, okay, let's see if I can find another one. Here's a sales one. Oh, I'm gonna go over here because you can't actually put on any of these and change them as you want to, but we're gonna look at this. So we have a sales, consulting sales through Discover Card. It was a deposit, it's $150. Now let's categorize it. Where do we wanna put it? Well, we're gonna look at our income accounts. Oh, look, there's one for consulting income. And that's where I wanna put this because it's a consulting fee. So, or consulting income. And so we put it, save it, check it right here, which basically says I went through and categorized it. Now, QuickBooks, same thing. I need to log in again. I had it set up, sorry. And we're gonna go to, oh, we're already here, okay. We're gonna do the same thing. QuickBooks is a little bit different, but it really not that much. So we're gonna go to our accounting. Actually, QuickBooks is different. We go to QuickBooks, you do sales. Sorry, there's different.
Yeah, banking.
Thank you. I had it all figured out, and then
It
changed.
shows up. Yeah, QuickBooks has been testing out a few things. It's in some versions it'll say transactions, but this is kind of an older one that says banking.
Okay. For some reason, it's kicking me off. Okay. Yeah, I've done different versions of QuickBooks, and it has, yeah, different ways. Sometimes it's banking, sometimes, yeah, it's accounting transactions.
And just to clarify, it's not a difference between your subscription level. As long as you're above simple start, the format's not supposed to look any different, the interface. It's just that QuickBooks tests out different features on different accounts at different times. So there's sometimes a slight language change that might only stay there for a couple of weeks, and then it'll go back to what it was. But it's really actually the only two language pieces I've ever seen. It's either like Wave, where it says transactions, or it says banking.
And QuickBooks, that is one thing that is different. You talked about the different languages. When it comes to banking or using their banking services, they have different languages that they use. Instead of, to me, it's a little bit easier to use Wave, because Wave, you just go through and you don't have to call it anything differently. With QuickBooks, you map them. And okay, so in QuickBooks, you do have the option. I do like the way that they have their dashboard. I do like what they have at the top is they have your checking, saving, MasterCard. They take all of their different banks and all the different accounts for the banks, and they put it on the top so you can see it easily. And Wave, they also have that, but you have to choose it differently over here on the side. Here you can choose whichever one you want. And we're going to look at the checking account right now. And I do like how QuickBooks, they categorize the things that you need to review. You know, in Wave, we checked that little checkbox, which showed you what needed to be done. Over here in QuickBooks, they tell you at the top how many need to review. And then you also, once you have categorized already. So in QuickBooks, you have something, you have different things you need to categorize. They will also let you know if there are records that match them. Sometimes they will and sometimes they won't. So let's look at this over here. We'll go down to Books by Bessie. They don't really have something you can match with, but it is also labeled as uncategorized, just like it did in Wave. So we'll click on that one. And this one, you don't have to click on an arrow. You just click anywhere on this tab over here, and it lets you know that, or on this line up here, this row, and it will open it up for you. And again, just like Wave, it will show you, information about it. So we don't have a category to it. It's Books by Bessie. So let's look at maybe some different income categories that they have. Here, I would say it's a sale of a product, or actually we sold our services to them. Let's pretend that we were doing lawn care services. We did, mowed their lawn, and so we put services. Now we add it here. And then automatically, like I told you before, now instead of 25 to review, we have 24 to review. And we can look at something that we want to match. So let's look at, over here, they found a match for this, this deposit. And you look at the deposit, here's the date, here's the deposit, the bank detail, and it looks like, they found the record, it matches with the record, and you can push match. And now we have 23 that need to be reviewed. Sometimes QuickBooks will find different records for one transaction. So here we have a transaction, and QuickBooks found 2 records. It's for $75. Now, it says here it's from Pam Seats. And so you're looking, okay, that looks like $75 from Pam Seats. They're saying they also found possible they could categorize it the same as Bessie's books for $75. But we know that it's from Pam Seats, so we'll just push Pam Seats, and then we'll match it. And now we've categorized it. So now we have only 22 left to categorize. So it's a little bit different, but still the same process, which is fairly easy. Now let's go back to here. And that's basically it. You know how to categorize your transactions. Now, what is the purpose of categorizing your transactions? Why do we do this? We do this because now you can run reports. Now you can look at your business from a whole perspective. And one of the main reports that you will be interested, at least right now as you're starting out, and one that I'm going to kind of go over with you a little bit, and that is the profit and loss report. This is it's a basic report, and it will help you with your taxes. It will help you with getting loans. It is knowing this report and having it is going to help you out a lot. It's going to save you time and it's going to save you money. The profit and loss report consists of some very basic parts. We have the income, the total income, the money you brought into your business, the cost of goods sold. We talked about it already. That was what it costs to make the goods that you sell. We have the gross profit. That is when you subtract the cost of goods sold from your income. And then you have your operating expenses. This is a fixed cost that we talked about a little bit before. And then we have the net profit. That is your gross profit minus your operating expenses. And we're going to go look at these a little bit on some of our banking platforms. So let's look at, we're going to look at some reports now. And it's pretty easy. We'll just go down to reports, but I'm actually going to switch the account to, let's try this one right here. And let's look at some reports there. When I was doing this on my own, my internet was a lot faster. But I'm pretty sure everyone can sympathize with slow internet sometimes. So let's look at some of our reports. And on Wave, it's going to give you 3 basic reports you can choose from: profit and loss, balance sheet, and cash flow. I know Ian's going to talk about balance sheet a little bit and cash flow a little bit. Whereas I was going to show you the difference when you're on QuickBooks and you want to go to reports, you're going to have a lot more options. Not only are there a lot more options, but there are even categories. We have, our basic ones here are balance sheet, profit and loss, and another one that a lot of people like to use are the accounts receivable aging summary. Basically, how much the people that still owe you money, how much it is, how long it's been since they paid you. There's going to be a whole bunch of different reports that you can choose from. I mean, look at all of these reports. But right now, the basic ones we're going to kind of talk about are basically talk about is profit and loss. So let's go to our profit and loss report.
Jessica?
Yes.
Quick question. Somebody asks, are Wave and QuickBooks the only options for bookkeeping?
No. There are several different options. A program that I've worked with that's really good is Xero. And I know that there's one that Ian had mentioned before. And what was the one that you'd mentioned before for bookkeeping?
Yeah, I mean, there's FreshBooks, there's like 17 Hats, there's ones that keep getting added all the time. These are really just kind of the bookends, right? So QuickBooks being advanced but paid for, Wave being a little more basic but very much sufficient for small businesses, and it's free. So if you have a particular feature that you're looking for that, let's say, the free option doesn't have, then you might want to look for one of those paid options. Wave is the only free one that I'm aware of.
All right. Yes, I'm looking at different, trying to get you a good example of our profit loss from different accounts. So, was there another question that came up? Let's see.
Yes. Which platforms do accountants prefer?
It depends on the accountant. I worked with one who really liked working with Xero because of, the cost and how easy it was to work with. I've talked to a lot of accountants who really like to work with QuickBooks because they have a lot more options. So it just depends on, I think most accountants, when it comes to looking at your books, they care more about how organized it is and how easy it is to get to. I know that I have talked to one who was she had a hard time because some of her clients used the desktop version of QuickBooks, and it was really hard for her to get their information. So I guess it just depends on the accountant, but you can definitely ask around and say, which one would you prefer, I use, but then again, once you get used to one, it's kind of hard to switch back and forth with different ones. So it's your preference and it's their preference. And if you are part of it, I just want to say, if you are part of the QuickBooks community, there are options there to pick bookkeepers or accountants that work directly with QuickBooks too. You can hire from there. When it comes to the profit and loss statement, we already talked about the main things they're going to talk about: the income, cost of goods sold, operating expenses, and net profit. And I'm just kind of going to go over those just a little bit more detail. And you have this summary view, or you can have a detailed view. So let's look at the detailed view. This would be, I'm trying to get over here, we have, so this is kind of the money that this person brought in. Different sales, and you have a total income there. And right here, these are uncategorized incomes. I haven't categorized them yet, but usually before you get to this point, you'll have categorized everything, and it'll tell you where your money's been coming from. And this person did not have any goods they sold. And you may be like that. You may not sell any goods. You may provide services only. But so they subtracted the cost of goods sold from the total income, and then you have your gross profit. And as any of you know who are business owners, this is not what you take home, right? You have your operating expenses. So these are your expenses that are not going to change. And you have your utilities that are always going to be the same. So you subtract your operating expenses from your gross profit, and then this is your net profit. And this is a very important number right here. We see it also up here, your net profit. The reason why this number is so important is because this is where your taxes are gonna come in. This is what you're gonna be taxed on. They're not gonna tax you on what you put into the money, what you spent in it. They're gonna tax you on this amount right here. Do you have any questions about that in particular, the area? All right. So we'll go back to our slideshow. So we talked a little bit now about our profit and loss statement, and also that net profit that we talked about. People who are going to look at loaning you money for a business are, different banks. They're going to look at that net profit. They're going to see how much money you're actually bringing in after all of your expenses are paid. I wanted to talk a little bit about chart of accounts. We went over it a little bit. I know that sometimes this can be a little bit confusing to some people. What is a chart of accounts? It's really actually quite simple. It's just the whole list that you have of the accounts you can use to categorize your business income or expenses. They're separated into 5 categories. We have assets. Those are economic resources that bring value to your business. For example, let's say that in your business you have a truck that you bought to help haul things. Well, this would be an asset. Liabilities, that's what your company owes. This would be debts that your company may owe, or even debts to pay off assets. This one liability is, let's say that you're one of those companies where people pay you ahead of time and then you complete the services. Well, them paying you ahead of time is a liability because you kind of have to earn that service off. There's also income. We talked about that money that comes into your business, expenses, the money goes out of your business, and equity. That's all of your total assets minus your liabilities. So these are the categories that you're going to have. So I think we have another question. I have nothing but startup costs right now. In Wave, where does that go? I'm not interested in loans yet. That is actually a really good question. Now, the question is, where are your startup costs coming from? Are they coming from you? If they're coming from you, then we're going to put those as owner's contributions. Those are things that, as an owner, you've put into your company. Now, if they come from someone else, if they come from, you said you didn't want to use loans, but if they come, even if like your parents or, or family members, someone sent you money, then you're not going to want to put it. You're going to put it as a liability from them. And so let's look at our chart of accounts. So, and for that, it's really easy. You go into accounting again, and then you will have chart of accounts. And they will tell you all of these different accounts. We have at the top, assets, liabilities, income, expenses, and then equity, which could be owner's equity, owner's investments, which is kind of what we're talking about already there. Let's say that you want to add your own account. That is actually a very good thing, because when you're categorizing your information, the more categories you have that are more specific, that will be helpful to you to know where your money is either coming from or going to. Now let's see, we want to add an expense account. Let's say that you have, makeup, whatever you need, account type. We're going to say it's going to be, you're basically, I'm just making up something right here. Let's say it's a specific credit card. And so you want to make it not just credit card, but you want to make it Discover, because you want to know exactly how much of your expenses are going out to Discover versus how much are going out to, to other accounts. And so basically you've made an account and you put a description. Sometimes you can put an ID, a number ID if you want to. It's really easy. You've added an account. Now, whenever you go to categorize your transactions, you have the option of choosing that account. And you go over to QuickBooks, you have the same thing. It's also going to be under accounting. One thing that QuickBooks does is up here you'll see we have chart of accounts or reconcile. Right now we're going to go to our chart of accounts. And QuickBooks has a lot more accounts that you can choose from. A lot of businesses actually like to use the QuickBooks chart of accounts because they have so many chart of accounts and because of the way they categorize them. And you can also put subcategories, however you want. It's up to you. I know some people maybe are a little bit nervous about changing things around because they wonder how it's going to look when it comes to filing their taxes. Well, this is for you. This is so you know where your money is and you can understand what's going on there. It's not something that the IRS sees and, oh no, you categorized this wrong. This is for you and how you understand your business. It's like I have a few more questions here. Owner's investments as in the equity section. Yes. That was when I was talking about the investment that you put into your business. Is there any bookkeeping software app that allows you to insert a mock-up or a photo into an invoice? I know you can put lots of things into an invoice. I don't know about a photo.
Yeah, I'm not sure if you're talking about an attachment. Any of the systems would allow you to attach something to an invoice, but most of them have their own fields for like customizing the actual structure of the invoice, which some cases that actually is a reason I've heard a lot of people use these kind of other bookkeeping systems that we're not highlighting today, because they just really like a format of a certain invoice. There is customization you can do on QuickBooks and Wave, but hard to say what's going to fit for everyone.
Yes, I've seen a lot of different customizations when it comes to QuickBook. You can change, you can add your business symbols. You can do a lot of things to it that you want to. So I don't see why there'd be a problem adding a picture. I don't know. I've never tried to add a picture on it before. It's something you might have to play around with. There is, when it comes to QuickBooks, if you want to just try things out, they have one thing I really love is they have a kind of like a dummy business, and that's what I've kind of been showing you information from. It's not real information. You can change things around as much as you want. It goes back to basic. So you might want to try doing that, and then try making some invoices and seeing what you can do with it, experimenting a little bit. Now, one of the main reasons why we are categorizing and doing our reports is so that it helps you with your taxes, or it helps your accountant with your taxes. So when you're creating and you're adding your chart of accounts, you can also, if you want to, if you can name these or sync the names of those categories with tax categories. Like if you want to say advertising, car and truck expenses, commissions and fees, there's a whole bunch, but they're not on your Schedule C tax form. They're not going to have enough room to put all of the different possible places you can put your money. So what really matters is that your business expenses, they're legitimate business expenses, and that you can add them how you want. It's if you have advertising expenses, plus you have you can put stuff as it's hard to explain this without going into too much detail.
I always use the example for like advertising on your Schedule C might be the sum of two categories you have that are maybe like digital advertising and print advertising in your chart of accounts, right? Might be important for you to see both of those, less important for the IRS.
Exactly. They don't really care how many different, advertising accounts you have, as long as everything that counts as advertising is put there, and that you can prove it on your, on your statements. You can basically say, okay, this is what it is. As long as it's a legitimate business expense, you can add it. And it's important to add as many expenses as you can, because that's money that you don't have. So you don't need to be taxed on money that you don't have and you're not getting. So it's important to know what those expenses are and to be able to add them, but they don't have to match up perfectly with the language of the tax forms. If you want to, go ahead and sync your chart of accounts to be exactly what they have on here. But what's important is that you or your accountant knows what those expenses are and that they can be backed up and shown. I'd like to go a little bit over invoicing. We've had a few invoicing questions already. Invoicing, it's a time-stamped commercial document that itemizes your record transactions between buyer and seller. So in other words, it's what you give to the people who you've done business with. It's not a bill because it's not to you, but to them it's a bill. So your invoice comes to them and they see it and they see how much money they owe you, and then they pay you according to that invoice. Invoices may include items that were sold or services that were rendered. It could be, maybe someone sold 3 books and they also gave you some consulting advice. That could all be on the same invoice. Here's just an example of a basic invoice where you have, the company that is sent from, you have the invoice number that helps you look up the invoice quickly, the name of the recipient, and basically all the information that they have here. And I'm going to go over some different invoices. I did want to say though that maybe you don't send invoices out. Maybe that's not what your business does. That's fine. But the good thing about both Wave and QuickBooks or other, accounting systems, I don't know exactly all of them, what they offer, but at least I know that Wave and QuickBooks, you can do invoicing. And if you do that, you at least have a record for yourself with your client information on it. One other thing that makes this invoicing online really, beneficial is that you can send it out via email. You don't have to put it in put it in an envelope and, pay for the postage. You can send it out directly online. And if you choose, to be either, with Wave, you have to pay for it. And with QuickBooks, as part of the services, you can get paid for it. Let's really quick just look at a simple invoice that you can do through Wave. So we're going to go to Sales, and we'll just go to Invoices. And it's really easy. You basically pick a customer. So let's pick, Jenny Long, and you just push, it will create an invoice. Then I guess you can add your customer here, and it already has all of her information saved here. And it will already give you an automatic invoice number. Gives you the date. You can change the date if you want to. And you can then add whatever items you want to. So let's say you want to add consulting services, and then you add how many hours or whatever that you offered those services. And then it automatically just sets it up, and then you save continue, and then it allows you to email it. So you create it. You just go through a whole bunch of steps, but this is a basic, simple invoice. With QuickBooks, you have different options when it comes to doing invoices. We'll go also to Sales. And on Sales, of course, you have Overview, All Sales, Invoices. We'll go to Invoices. And then here we have a lot more people in the system, but you choose, these right here are invoices that were already sent out. One good thing about sending invoices also is that when you get paid, you can mark that payment right off of the invoice that came. So you can just match it to that invoice. It's kind of an easier process than if you actually mailed out an invoice, got it back, then you'd have to actually manually write the information into the system. So right here, it's simple for you. You can create an invoice. And I know there's a lot of tutorials on how to change your invoice. You put the basic information in, but there's tutorials out there. You can take a tour on how to customize them the way you want to. See. Now, another thing that I just wanted to briefly go over, that would be reconciliation. Reconciliation is the ability to check your books with the bank's books to make sure that everything matches. Reconciliation is done usually at the end of the month. It's a fail-safe to help you catch any mistakes that you may make, and also make sure you just didn't forget anything. When you reconcile, you'll basically be showing your balance and the bank's balance, and you'll be checking those things together. Here is an example of like when you're doing reconciliation through an online banking system. And you can also, there's so many helps through Wave and QuickBooks, videos you can watch, instructions that kind of help you through this process. You'll see this person is reconciling their information. We have their statement balance, and then this is the wave balance. So you notice that there's a difference here of $158. So we know that something is missing, and it'll give you the chance to go through and find what's missing. And it's not so much that you haven't been doing, you know, your bookkeeping correctly. A lot of times it's because there's a difference between when you actually get your money and when the bank shows that you get your money, or there's just, I don't know, a lot of different ways that things cannot match up. And that's why it gives you the opportunity to go through and reconcile, and you figure out what's missing and you match it. And then you know that your books are in line exactly with what the bank has. Another quick thing that I wanted to go over is the health of your business. We talked a little bit already about different expenses, about the variable expenses and about expenses that stay the same, that are constant. When you have growth in your business, that's different than scale. So you can be doing a lot of business, selling a lot of products, but your expenses for those products are staying the same. So no matter how much you're making, you're really not, your business really isn't growing, you're just working harder. That is where you want to view in your different reports that are available, whether you have growth or whether you have scale. Scale is where your expenses start to flatten out. They're the rent stays the same, but yet you're selling more, and so therefore you have a bigger gap here between your revenue and expenses. So your net income is bigger, and that's what you want to see on your business. So when you're looking at your reports and when you're looking at how your business is going, you can see if you're actually really succeeding or if you're just selling more. And that's where I wanted to end off there, and I'll give the time back over to Ian. Thank you for listening. Then you can kick me. I'll stop sharing, and there we go.
Yes, thank you, Jesse. That's great. So the things that I wanted to end off on is just to touch on the other two main financial statements, just so you have a general idea about the different things they're trying to capture. So we talked a good bit about the income statement. This really is your core business performance document. Tells anyone reading it how the business did. But this is without context for who the owner is, how long the business has been operating, anything like that. This profit and loss statement that has $36,000, this might be operated by a person or a business that is way over their head in debt. The profit and loss statement doesn't tell anything about that. It might alternatively be operated by a billionaire who this is a very small number to them. It doesn't tell anything about that. It looks specifically at the business's performance. And even those sections we were talking about, the difference between gross profit and operating profit, which is synonyms for net income or net profit, tells specific stories about the business, right? Specific context about the sales and what their costs were, and then the context of the full business. Now, if you want to look at additional pieces of information, which especially if you're going to try to take on loans or bring on investors, they're likely to ask for all of these different pieces. So the profit and loss statement, the bottom line, the bottom line of the profit and loss statement becomes the top line of the cash flow statement, right? So when we have this net income of $36,000, you'll see that same number show up at the top of a cash flow statement. I often think of this as like an old ancient Egyptian scroll. We have up at the top the story about what the business did during some period of time. And then that bottom line ends the chapter. And now the next chapter begins, the next portion of the scroll vertically, about the context of that business. When you made $36,000, was a portion of that invoices that you've not yet gotten paid for? If so, then there would be a reduction of cash from the net income number for accounts receivable. Maybe you took some money out of that profit to pay for income taxes as a pass-through owner. So now your cash, from your total cash from operations is less. You have now $26,000 of cash from this period. There are these other sections that are going to be the same no matter what the business is, no matter what bookkeeping system you have. You might have different categories, but the sections will be the same. You know, if you did purchase a vehicle or property, something where you're investing in the future of your business, that's going to show up here in this cash from investing. Maybe it's purchase of it that reduces cash, or a sale of it that increases cash. And then you would have this cash from financing. Now, the financing is what you might think of with that word investing when someone else invests in your business. Maybe you received an equity injection, capital contributions that might be considered, or maybe you received a loan, or maybe you started paying back loans, right? Those could all be reasons why cash either goes up or down, but they don't have an impact on your sales or your expenses. That's why they're in a separate report, this cash flow statement. So when we consider all these things, maybe the $2,000 I used to start the business, then I received, $2,000 I used to start the business, then $50,000 I received in a loan. I paid some of that back, and then I paid myself, the owner. I took $40,000 out of the business. All that gets added up, and we get some total cash flow for the period. This $28,000 is not a profit number, right? Profit was on the income statement, but we've got new cash of $28,000. Now the question is, especially because we have these loans, what's my actual position in the business, which is often referred to as equity? The balance sheet pretty much just explains the assets. I think that's the easiest way to think about this. Your assets, like either cash, maybe inventory, or physical pieces of assets that you own that you could turn into cash later on, that's up top. And in this case, we have $32,000. Now the question is, how much do I owe? And at the end of the year, right, so balance sheet just measures a point in time, different than the other two, which measure a period of time. At this point in time, I still owe $40,000. So even though there's $32,000 of assets, if I was to try to settle up the business today, I wouldn't have enough to cover those liabilities, the amount that I owe, this $40,000. And that's what equity tries to calculate. Ultimately, what is that difference? Now, the pieces that make up equity include net income, but they also have things like how much I put into the business at the beginning, or how much I drew out over the year. This is both for those owner's drawings and for those taxes that you saw on the cash flow statement. And all of this will always balance out. If you're using a bookkeeping system, they'll always balance the assets, either always equaling liabilities plus equity, or assets minus liabilities equaling equity. You can move them around the equation. They will always balance out. If you're using a bookkeeping system and you've done your bookkeeping incorrectly, it might force some explanations here, but it will always zero out. If you're doing it manually on a spreadsheet and you end up with a difference here, you're not doing your balance sheet at all correctly. So general idea about what things are trying to get captured here is you're going to be different for every business, but they tell a story. And the more that you understand what your business's financial statements say, the better you'll be able to determine which parts of the story you want to tell. Maybe you want to just focus on net income instead of what your actual equity position is. Then when you're talking to a partner or investor, you choose to lead off with the net income. Maybe instead you want to focus on the gross profit instead of the operating profit. If you understand your financial statements, you'll be able to pick and choose which portions you want to at least lead off with. Not suggesting lying about the other pieces, but you can prioritize which parts of the story you want to tell. And that was really it. So I will stop the share. I know we're going to send out slides and options for you to follow up. I'm also going to include a very brief survey from Start Small, Think Big, which essentially just asks you how comfortable you feel about your business's numbers. If it turns out that you feel very comfortable with your numbers, we'll send you some resources and you can become a client if you want to, all completely free services from Start Small. But if you have some concerns, we're going to try to address those potentially, work with you one-on-one in a discussion about that kind of business model concern that you have. Don't want people continuing to lose money if it seems like that's going to happen. So really very grateful for being a part of this. Thank you to Jessica, Heidi, and today and the rest of the DC Women's Business Center. I'll leave it over to you.
Great. Thank you, Ian, and thank you, Jessica, so much for this really valuable information. I just wanted to end the webinar by alerting you all to some upcoming training events that you might be interested in. We have a budgeting and savings for small businesses event on May 6th from 7 p.m. to 8 p.m. Women entrepreneurs want to start a business. The DCWBC tells you how. May 11th, 11 in the morning to 12:30 p.m. And then Made in DC certification workshop, May 25th from 12 p.m. to 1 p.m. Also wanted to let you know about the HER Summit, which is coming up on May 13th. And you can find out information on that at HER Summit. I think you have to Google a HER Summit. I apologize. I don't have that off the top of my head. But stay tuned for other events that are upcoming, and you can subscribe to our newsletter, which will let you know about all of our upcoming events at dcwbc.org. Thank you again to everybody who joined today, and a special thank you to Jessica and Ian. And I did want to just let you know about our team. You know me, Sade McCoy is our communications specialist who works very hard to get these webinars running smoothly. Monty Taylor is our resource coordinator, and Latoria Brent is our small business counselor. Again, we are here to help you. Please feel free to contact us at info@dcwbc.org. Learn more about us on our website and sign up for our free one-on-one counseling sessions. Thank you again. Hope you all have a great day. Stay safe, stay healthy, and we'll see you at another webinar soon. Thanks, everybody.